It's a 60-point rise on the Nifty. Good opening for the market.
For our markets, we're up close to about 0.5%.
The Nifty up 110 points.
Inch towards the end of the week, the market is making a bit of a dash higher. And it's looking good. IT index up 3%, so big one actually. I think a lot of contribution, a lot of participation coming through from IT names. And then it's banks.
Hello and welcome to CNBC-TV18. What a day for the market. The Sensex hit record highs today. The Nifty is now less than 200 points away from those all-time highs. You're watching Bulls Charge Ahead. I'm Sonia Shenoy. With me is Prashant Nair. And here are all the top headlines for the day. A record-breaking day on the Lal Street sees the Sensex hit a record high after a last-hour rally. The Nifty posts a record close of 18,484 and is just 120 points away from its peak. Infosys, the HDFC Twins and TCS all bat for the Bulls. The Nifty Bank closes above 43,000 for the first time ever after hitting a lifetime high. The mid-cap index gains 140 points with GSPL topping the list of gainers. And stocks rally across the world after the minutes of the last US Fed Reserve meeting shows a majority favor, slowing the pace of monetary tightening. Well, thanks a lot for watching Bulls Charge Ahead. It was indeed a record-breaking day on the Lal Street. The Sensex hit a record high in trade, gaining over 700 points, largely thanks to a late rally. The Nifty gained over 200 points and is now just 120 points away from its peak. The last time the Sensex hit a record high was way back in October of last year, and there are some reasons for why the market has been charging ahead, especially in the last few days. One, of course, is the US Central Bank is now looking to slow the pace of rate hikes. The Fed meeting minutes indicated that the central bank is now seeing some progress in its fight against inflation. Not just that, other parameters are also working in favor of the market, whether it's a fall in crude prices or even the dollar index below 106. If you look at the market this year, in 2022, there's been a lot of participation from individual pockets, but the one that has stood out the most is the PSU banking lot. So this time around in 2022, there's almost a 70 to 100% rally that we've seen in names like Bank of Baroda, Union Bank, South Indian Bank, and that definitely is a pocket that the street has been focused on. But let's go across to Prashant now and talk about the huge rally that we saw in the market and the record highs on the Sensex. Prashant, over to you.
Well, the Sensex at new record highs and looking absolutely fantastic, isn't it? The last high was made on the 19th of October 2021, and after a year, we are basically back at those levels once again. So that is the Sensex for you. And by the way, if you look at most markets, most big global markets, if you can move on, India is right on top. I just quickly put this together. This is YTD returns, all in dollar terms. Of course, in rupee terms, the Indian market is in positive, but dollar terms, it is down 2.65%. But this so beautifully shows that this year has been about relative outperformance, right? Absolute as well, but more relative. So look at the S&P 500, which is down 15.5. DAX is down 16. Hang Seng is down 25. Actually, I only found one market which is actually better performing than the Sensex. That is the Brazilian Bovespa. The Brazilian Bovespa is up 8% in dollar terms. But 2 points there. It's largely made up of resource companies, right? Metals, mining, etc., which has had a very good year. And the second is it's a much smaller market. I mean, the Brazilian market is $700 billion in size, whereas the market here is $3 trillion. So we're talking about a much larger market. Anyway, so this is global outperformance in that sense. Let's move on and tell you a little bit of the kind of sobering fact as well. And I think this is important, right? Many have said that the market is at an all-time high, but portfolios are hurting. Portfolios are not back at all-time highs. And I think there is good reason, and this is the data which shows you that. So even as the Sensex is at a record high, only 13 Sensex stocks are above their October 2021 peak. So, this is the same level when the Sensex last was at the high, and only 13 individual Sensex stocks are above the previous high, which means 17 of them are below their October 2021 high. That is what, 57-58% of the Sensex constituents. Which is below its October 2021 levels. Let me just tell you which are the sort of performers and which are the underperformers. And these are the best performers, really. ITC, back when the last time Sensex was at a high, ITC was 138 rupees. It's at 341. Mahindra & Mahindra, 917 back then, 1253 now. SBI, almost under 500, 600 plus now. ICICI Bank and Bharti are some of the other names. On the flip side, you find a lot of technology names. So Tech Mahindra, the October 2021 level was 1540. The level now is 1068. Tata Steel is another one, adjusted, of course, 137, 106. Bajaj Finserv, you can see the difference. Infosys, below the levels of October 21. Mind you, not all of these made absolute peaks in October 21, but because we had to compare with a consistent period and keep the comparison consistent, we've taken the October 21 levels. Infosys, and then, of course, there is Bharti as well, 681 and 840, sort of 7. That's those are levels. Anyway, let's just quickly tell you the Nifty now, and I'm going to leave with that because the Nifty is now just 0.5%, not even 0.5% away from its respective all-time high, which was 18,604. And I think that is, we don't have to wait very long with most other indices there, at least the frontline benchmark indices. It's a matter of time, maybe tomorrow, maybe in the next couple of days or so. We have a couple of voices now joining us. Krishna Kumar, S. Krishna Kumar is with us. He's director at Lion Hill Capital, and Gurmeet Chadda is managing partner and CIO at Complete Circle. Gentlemen, great to have both of you here. Thank you very much. Gurmeet, if you were here in the studios with me and Sonia, I would have asked you to do a bit of bhangra. But, things are looking good, you would say. I just put out the data that only 13 Sensex names are above their previous October 2021 highs. And do you hear that kind of feedback from clients? Although indices are at all-time highs, portfolios perhaps not quite there yet.
Absolutely, Prashant. I think technology, healthcare, commodity producers, even within banks, we have seen huge outperformance of PSU banks and ICICI over, let's say, an HDFC and Kotak. So maybe half of the constituents of the benchmark probably are nowhere near and could possibly actually down significantly from the previous October high. And I think there's just a small feeling of having missed out, especially in family offices and ultra HNIs, because they have been holding reasonable cash levels, considering all the negativity around rate hike, war, Fed going aggressive with rate hikes. So nobody would really imagine, but this is what it is. I keep saying that discipline and process will always be rewarded over timing. And I think the retail investors probably have tasted some blood here, because if you see 2 years, 3 years, 5 years, 10-year SIP returns, let's say, even an index fund, the 3-year return is 20%, 5-year return is about 16-17%. So I think probably there is a growing understanding that if you follow the process, there is double-digit returns to be made in Indian equities with obviously volatility. So I think supported by strong domestic flows, resilient of India on growth and other parameters, I think is what helping us out. But as I said, the market is rewarding earnings, and market is equally punishing bad earnings or any shade of corporate governance.
Okay, we have S. Krishna Kumar, who's also joining in, the director at Lion Hill Capital. Mr. Krishna Kumar, it was just a matter of time before this market hit new highs, right? The only thing stopping this market was the Fed rate hikes, and bam, comes the Fed and says, now we're going to go slow on rate hikes, and the market latched on to that. But internally, do you think there is enough for the Indian markets to build on to these gains? Earnings are a bit of a sticky patch right now. We still have some more headwinds. FIIs have been selling for the last few days. So after hitting these levels, what next? You think we could build on to the gains?
Yeah, I think while one could be a little bit more cautious on the Nifty or an index level that you kind of work with, given that even if you look at the kind of earnings for FY24, we are discounting that by a healthy 18.519 times. So I think the returns henceforth could be a lot more made from being more stock specific, more bottom up, looking at stocks and sectors where earnings growth could be higher than expected, where the surprises could come in, because the valuations are quite expensive, right? There's a broad market and even in pockets. So we got to be a little bit more cautious. While it's always great to celebrate a new high in the market, but I think, like you mentioned, there would be some headwinds in terms of valuations, particularly, and also in terms of the Fed action finally, because while there is a view that the rate hikes could be more measured or probably halt at some point in time, the rates could remain higher for longer, which could basically push the markets in India into a bit of a consolidation mode for some more time around these levels, basically. So we should be more specific, looking at more bottom-up approach to investing rather than look at Nifty or the large caps broadly as a basket.
Okay. In fact, Gurmeet, I wanted to come in on this because although the headline index is at an all-time high, there's no real euphoria in this market. There's a little bit of a missed out feeling, right? Even in individual stocks, I mean, a lot of mid-caps are well below their 52-week highs. Why do you think that is, and what's the way forward now?
So, I think you have to have a two-pronged approach here, Sonia. I think be where the earnings are likely to be strong and are strong. So that's one way of doing it because it gives you a margin of safety. Now look at, so for example, PSU banks. It's easier, we can get carried away, seeing the sharp movement in the bond index. But we know that if you compromise, credit underwriting standards, although I think IBC has been a game changer for PSU banks as well, and qualities have improved. But here we got to be a little careful. So look at, for example, SBI, still at about 1.5, 1.6 book value. I have not seen SBI at 1% ROA and 17% ROE for a long, long time. Their slippages were only 30 basis points last quarter. Credit cost was just 50 bips. And I think what we have to now see is what is the texture of the loan book. So for SBI, for example, 80% of the loan book is MCLR and EBLR linked, where the reset happens 6 months and 3 months, which means the bulk of the repricing will happen in second half of the year, which means that any cost pressures in deposits can be offset by expansion in NIM. So I think I'll continue to be constructive there. But in case of other banks, if something is already at, let's say, 2.5, 3 times book value, pricing in a lot of positives, the returns could be a little more muted. Second approach is to play stories where there is current pain right now, but things can improve in next maybe 2-3 quarters and go a little staggered. So pharma, for example, I don't think so that the API prices will continue to deaccelerate or energy prices will continue to be high. There are a lot of companies who are working on niche APIs. There's a lot of capacity building happening in custom synthesis. So you take some value approach where good business is going through pain in pharma and IT, take a staggered approach there. And one part of the portfolio you play where the earnings are strong, which is some of the banks, some of the auto stocks, some of the other consumption stocks.
Right. Krishna, your thoughts on which are the best placed sort of themes, sectors, stocks, if you will identify those for us?
I think, as we've been alluding in this call, the banking space, the lending space is in a great wicket today, given that we are into a new investment cycle in the country. The capex is picking up. We're going to see huge amount of investments across infrastructure, industrial capex, and those triggered by the PLI in the next 5 years. So that, along with the retail credit and the agri credit growth that we have been seeing, which have been quite buoyant, I think a 20% kind of credit growth over the next 3-4 years is something that one would like to pen in. With that, and the fact that we're going to see benefits of higher NIMs and better operating leverage and low provisioning costs, I think banking space would be a big area that you would be like to be in. Also, along with that, I think given that we need a huge amount of distribution of finance products, the NBFCs also would come back in a strong way at this point. Given the wealth effect that we are seeing, the kind of investors coming to the market, the wealth management and the insurance space again looks pretty attractive for a 15% CAGR over the next 5 years. So this is the area where we would like to bet on. Industrials and engineering, particularly manufactured engineered products, are something where we are seeing huge amount of traction. I think a lot of capacities have come up and good traction from the Western world, and India has become a real alternative to China in these areas. So I think these are the areas where one could be very confident about 15-20% kind of revenue and better bottom line growth, and would continue to be a very key part of the portfolio selection as we go into the next 3 years.
Okay, let's do one thing. Let's take a quick commercial break, but do stay tuned in. We'll be back in a jiffy. Markets, the Sensex at least at all-time highs. So more on the discussion on the other side of the break. Stay with us. Welcome back to Bulls Charge Ahead on CNBC-TV18. This is the day when the Sensex has hit a record high, and our guests are still with us. So let's get some final thoughts from them. Gurmeet, let's drill it down to individual stocks, right? I mean, if people have missed out on this rally and perhaps want to invest in a few names, what would your recommendations be?
So, Sonia, we are continue to add on to banks, especially SBI and ICICI, and some of the mid-sized banks like IDFC. I think earnings will be pretty strong. I covered that. We like some good names in manufacturing, especially defense. So solar industries, we've discussed a couple of times in our interaction, continues to do very well, both on explosive as well as the defense order book. We are also tracking HAL, very impressed by, so there is a near-term support because of high margins. So repairs, overhaul and spares, which is a high margin business, is now a significant part of the revenue mix, which I think will keep EBITDAs at 26-27%. The manufacturing order book is very strong to support it in the medium term, which is upwards of 15,000-16,000 crores. And their order books in terms of execution are well defined in terms of what they're likely to deliver in 1 year, 2 year, up to 5 years, which leaves with surplus cash on the balance sheet and no stress on working capital. So that's something we are looking at. We are looking at some names in chemicals and APIs. I think there is a case in terms of valuations now being more reasonable. APIs in particular, we expect almost some $22 billion of molecules to go off patent. There is significant edge Indian companies has in custom synthesis in terms of the relationship with MNC Pharma. So right now, there's something which is down right now. Maybe there could be one quarter more of pain. You've got to be a little selective now. And some amount of cash in the portfolio won't hurt. A 3-month CD is now 7% plus. So if you stay in a liquid fund, don't do anything, you still earn 7% plus. So go staggered and be balanced in your allocation.
All right, Gurmeet and Krishna, thank you very much, both of you, for joining us. And, Gurmeet, when the Nifty makes a high, I think the Bhangra is required. So
next time, the studio special.
You can invite Krishna for the Bhangra as well, you know.
I showed Krishna, I know.
Why are you leaving him out of the party?
Absolutely. No, but I don't think we'll have to wait very long. Maybe tomorrow. We don't have queues, by the way, out of the US because US markets are shut. Thank you again, both of you, for joining us on short notice. Appreciate it very much. So Gautam Shah is someone who we spoke with of Goldilocks Premium Research. This is a conversation we had in the morning, who was telling us, Sonia, if you remember, that new highs in December, right? And new highs today.
New highs are here. And he had much higher levels, actually, that he's looking at. So let's listen in to what Gautam Shah had to say earlier in the day.
I'm of the view that very, very soon you should see the Nifty get past that resistance of 18,400. Once we do that, we should get past 18,600, which was the lifetime high. And eventually, I think in the near term, we should see the market head towards 18,950. So I remain as bullish as ever. I think the market has displayed all positive characteristics. And if you throw in the breadth aspect, you'll be amazed to know that despite trading at lifetime highs, close to lifetime highs, you have the breadth, which is at a neutral level. So clearly, there is a lot of room for the market to do well, and therefore all dips are a buying opportunity. We feel that December itself, we should get past 18,600, which is lifetime highs, and there could be an attempt to get towards 18,950 December itself. I think it's a possibility.
Okay, well, on that note, let's wrap on Bulls Charge Ahead. Thanks for watching. But before we go, CNBC-TV18 is all set to lead the charge with a one-of-a-kind mega initiative, Future Female Forward, the women's collective presented by HSBC. Before the official launch, we were joined by some young future leaders who shared their vision with our managing editor, Shireen Bhan. Their dreams and superpowers transcend age boundaries, from loving the Hulk to saving the planet to wanting the stock markets to open late so that their fathers can drop them to the school bus. This heartwarming conversation is a must-watch.
My name is Avni Singhal. I go to JB Sen International School. I am 8 years old.
And what would you like to do?
I would like to open my own restaurant.
Your own restaurant? Why would you want to open your own restaurant?
Because I like cooking stuff for other people.
What's your favorite dish?
My favorite dish, I don't have a favorite dish. I like all of them.
Like everything, what is the one thing that you would like to cook if you could cook?
If I could cook, I would rather bake more than cook. I feel baking is easier. I've also baked cupcakes.
Oreo cupcakes. And if you had a superpower, what would that be?
I don't need a superpower because I have my family and friends, so I feel like I have everything, so I don't need.
High five, lady. High five. Family is a superpower. What a fabulous answer there. Hi, Nitara. How are you? How old do you think you are? 2? Yeah, 2. Who's your daddy? Where's Papa? Where's your Papa? What's your Papa's name? Do you know? No? Nigel? Is Nigel your Papa? She's looking for him. Hello. How are you today? No? Now you don't want to talk to I's teacher. Why? What's I's name? What's I's name?
What is I's name?
And what you want to be a superhero? Which superhero do you want to be?
Do you want to be a superhero? Hold the mic.
Yeah. What superhero do you want to be? The Hulk. Hulk? Yeah? Why do you want to be the Hulk?
What, Hulk?
No. You are the Hulk.
I love Hulk.
You love Hulk. Why do you like the Hulk? Because you love Hulk all the time. Hello, miss. How are you today? Your cheeks are your superpower. What's your mama's name?
What's Mama's name?
What's mama's name?
What's Mama's name?
Huh? Okay. Well, we also have one very young gentleman here on the panel supporting all the lovely ladies here. Hi, Kabir. How are you today?
I'm fine.
You're fine. How old are you, Kabir?
5.
5.
No, 5.5.
Oh, 5.5. That makes a big difference. So, what do you want to be, Kabir, when you grow up?
A coder.
A coder? Okay. So, when you see all these girls over here, what do you think of? Are you scared? You like the TV. That's a good answer. Very good answer, Kabir. Excellent answer.